So I was thinking about the dollar and whether it's possible for the dollar to collapse. Because at the moment the dollar it's basically at an all-time high. It's been the highest it's been for like 20 years or something. And if you look at the DXY index, it's now after today it's going up again. It's even gaining higher grounds. But there's a couple of things in this life that I've realized. It's what goes up must come down. Especially if it's going up fast. If something goes up fast, that means it's coming down fast. So, and there's a lot of things that's sort of keeping the dollar up at the moment. It's a lot of forces in the world that's pushing the dollar up to these insane levels. One is the 10-year dollar note. That's the bond, a 10-year bond that you can obviously buy from the US government. It's very attractive to investors. So investors want it, one, because it's not a bad return. It's not good, but it's not bad either. It's the wrong lane here. It's not a bad return. It's 3.5%, 4% or something. But it's a very, very, very safe asset. There's not a lot of risk. So it's almost guaranteed. It's a guaranteed investment. And obviously in this market that we're in now, where everything basically goes down, you want something that's safe, which is the 10-year bond. The other thing is the bad conditions in Europe that we don't see in the US. The high energy prices, there's a lot of food issues, food prices, etc. Obviously there's the war going on in Europe as well, that's causing a lot of issues. So that's not safe. So basically a lot of investors have sold, and also inflation, obviously a knock-on effect of that is inflation in Europe. So a lot of investors have sold all their euro assets, and they've bought the 10-year or any other bond of the government in the US. So there's this demand for dollars and nobody wants euros. So that's why the euro price have fallen and the dollar price have just climbed to new highs. But what if this changes? So there's two things that are obviously going to change. One is demand for dollars and the other one's the safe haven. And the reason the 10-year is so high is because of the high interest rates in the US at the moment. So it's a couple of factors contributed together that's pushing the dollar high. And what if one of these fails and there's this idea of a turnaround where the investors as well as like the physical economy is turning around? What will happen then? What happens if, for instance, the Fed hikes interest rates again, let's say 75 basis points, and suddenly people are struggling to make ends meet, so everybody's entering the job market? Because at the moment in America, the job market has shrunk quite a bit. There's not a lot of people in the job market. So that's why unemployment is low, because nobody needs to work. They've printed so much cash during the pandemic that people literally just don't need to work. They're sitting on enough cash. But with interest rates so high and obviously inflation still going up, they're going to run into a problem where they're going to have to go to work. So we're going to probably see unemployment rise soon, and that's going to signal to investors that there might be issues in the US. So that's the one thing that can happen. The other thing that can happen is that America has a lot of debt. A lot of the economy works around debt, and they built around low interest rates. So what a lot of people in America is doing, if you just YouTube how to get wealthy with real estate, you'll see there's a pattern that everybody does. That basically, you don't actually have to have a lot of money. You need a small deposit on a house. Then what you do is you buy the house. You buy a house out of debt and you rent it out. But because interest rates used to be so low a couple of months back, you can obviously get rental income. You can pay the house off with the rental income. Once the house is paid off, it's very important that you have to refinance it. You basically remortgage it at a full rate. So you literally take that entire house. Let's say the house is worth $300,000. then you will take out a loan on the house for $300,000 again, even though it's paid off. Because then you get that $300,000 out tax-free. And all your rent then goes straight back into the loan again, also tax-free. So it's a way to work around tax. And then that $300,000 you can just spend. It's your money. You can spend it now. The problem is a lot of people are doing this. So what happens if interest rate goes up and people are struggling to pay rent? So basically now you've got this debt that the rent is not enough to cover the interest. So rents are going to have to go up to cover this interest. So rents are going up. We have high inflation. People are going to be looking for jobs. There's going to be a cash shortage. These people are going to have to, in order to basically, they're going to have to close the loans. The only way they can close the loans is selling the house. The problem is if everybody does that, house prices drop. Then you're going to sit with a problem where the asset, which is the house linked to the loan, is too low. So the loan's much bigger than the house, so you can't sell the house. So there's going to be some serious issues there. And that's going to trigger defaults to go up. And that's another metric that investors look at. They look at what is your housing market default in your country. If you got a high default rate, which means people are just not paying their home loans, then it's dangerous. It's not, your money might not be safe there. So if that starts happening, obviously people will start pulling their money out of the US. And if things get resolved in Europe, so let's say Europe, the war stops, gas starts flowing again, prices go down, everybody will just pull it out of America and put it back into Europe, which will create an oversupply of dollar and a higher demand of euro, which means the euro will go up and the dollar will basically tank. And which basically means inflation in the dollar is going to go up, which means that in order to fight that, the Fed needs to raise interest rates. But raising interest rates actually caused the problem. So now you're stuck between a rock and a hard place where you have to raise interest rates to fix inflation, but the country actually can't work because interest rates are too high. And that's one thing that can happen. Another thing that can happen is that so at the moment, obviously, there's the new BRICS reserve currency that we don't know if it's going to come to fruition. We don't know if it's an actual currency or if it's just a way for these countries to trade easier. But there's the world is de-dollarizing. There's a whole de-dollarization movement. The BRICS currency is one big part of it. Another part of it is cryptocurrencies. If it gets to a point where I can buy goods, I can import goods, because a lot of the trades between the countries are not the country itself. It's obviously it's private entities that are doing the trades. If I can now suddenly, let's say, Ethereum's going on Ethereum version 2 now, which makes a lot of things cheaper. Ethereum payments are suddenly going to be cheaper, less energy. So institutions can buy into that because now the whole, the eco footprint is better. The carbon footprint's lower. So a lot of institutions and businesses are going to buy it now. And now I might be able to import goods from China and pay them with Ethereum or XRP. And that means there's no dollar in the equation anymore. So there's no use for a dollar anymore if I trade with China, or if Brazil trades with India or whatever. Dollar is no longer needed. And one of the things actually keeping the dollar up was the reason that everybody was trading in the dollar. Fuel, mainly oil, was purchased in dollars. And now, that's the other thing. And now what's also happening is Saudi Arabia is now saying, okay, at the end of September, when October starts, it's going to be $4. It's going to be $4 more per barrel if you buy oil in dollars. If you buy it in another currency, we'll give you a discount. So Saudi Arabia is actually, and this is all the OPEC countries, the OPEC plus countries, they're going to do it. So if you buy oil in dollars, you pay more for it. So they're literally pushing people off dollars. So there's this massive de-dollarization taking place. And the more that happens, the more the dollar is going to experience inflation, because there's going to be a lot of dollars suddenly flooding the market, because everybody's holding these dollars because they need to trade in it. So if you are buying oil from, let's say, if you're buying oil from Ukraine, okay, well, another country. Let's say you buy oil from Saudi Arabia, and you obviously need to keep a lot of dollars. So you're sitting with, let's say, a couple of $1 billion in your country, because that's the sort of the reserve to buy this oil. But now if they come to you and they say, okay, cool, no, you don't have to pay in dollars, you can pay in our local currency, or you can pay in Ethereum. You can buy oil now, it's fine. You're going to be like, oh, now I'm sitting with all these dollars, what do I do with all those reserve dollars now? You're obviously going to sell it. You're going to trade it in for Ethereum, or you're going to trade it in for Bitcoin, or for XRP, or for whatever your local currency is, but you're going to get rid of these dollars. So these dollars are just going to flood the market. So that means you're going to get pressure on the dollar from a lot of angles, and it's not too far in the future. It's happening now. So I think there's some serious consequences we might see soon, and it might be really bad in America very soon. If this happens, the average lifestyle, or the level of, what do you call it, the it's not life expectation, but your living standard. Yes, the living standard in America will drop a lot. It will plummet as well. So yeah, that's just my thinkings of today. Please leave a comment if you've got any ideas of where this might go. What other factors am I missing? What might still keep the dollar up? Because there's not a lot of... Obviously, another thing is that the Americans are importing way more than they're exporting still. So they need to kind of print dollars in order to fix the trade balance, which is just going to flood the market with more dollars. So yeah, it's an interesting one. I just don't see a lot of upside here. So yeah, if you like this video, then remember to press the button, and if you want to see more, remember to subscribe. This is Steve. Until next time, ciao.